Spot Ether exchange-traded funds saw 5 straight days of outflows this week.
These funds shed $952 million total, with over $787 million leaving in just 4 days.
This follows a record August where these funds brought in $3.87 billion.
Meanwhile, Bitcoin exchange-traded funds experienced $751 million in outflows, according to SoSo Value data.
Friday saw the biggest decline, with $446.71 million exiting Ether-linked funds.
Spot Bitcoin exchange-traded funds, however, added $246.4 million this past week.
Ether is up over 16% in the past month but down 1.8% this past week, trading near $4,300.
This drawdown may be linked to a move away from risk assets due to weak United States jobs data and recession fears.
Friday's weak United States jobs report increased expectations of Federal Reserve rate cuts.
However, Bitcoin has not reacted as expected.
It remains below $112,000, instead of rallying.
This suggests a potential for further decline.
The August jobs report showed only 22,000 jobs added, far below the projected 75,000.
The report also revised down job creation for June and July.
9 sectors experienced job losses, while health services and leisure showed growth.
This report significantly increases the probability of a Federal Reserve rate cut in September.
Bitcoin dominated conversations this week with users debating its role as digital gold.
Ethereum was frequently referenced in promotional materials for new tokens.
Dogecoin saw increased attention due to a potential United States-listed exchange-traded fund and mining expansion.
Tether drew interest over its strategy to invest more heavily in the gold supply chain.
Discussions around Multiverse X centered on concerns about dilution from increased EGLD supply.
Some users also noted ongoing work on Multiverse X services like X Portal and X Money.
Santiment tracks market sentiment and on-chain data across thousands of crypto assets.
These weekly roundups highlight projects generating the most discussion among traders and investors.
India and the United States lead the world in cryptocurrency adoption this year.
This is according to Chainalysis 2025 Geography of Cryptocurrency report.
India ranks first in every measured subcategory.
The United States climbed to second overall due to increased institutional participation.
This follows the approval of spot Bitcoin exchange-traded funds.
Pakistan, Vietnam, and Brazil round out the top 5.
Asia-Pacific is the fastest-growing region with transaction volume up 69%.
This growth is driven by activity in India, Pakistan, and Vietnam.
Capital markets are in flux and blockchain offers a superior alternative to traditional systems.
Its biggest beneficiaries are financial institutions and the unbanked.
Institutions gain speed and scalability.
The unbanked gain accessibility and equity.
Franklin Templeton launched their first tokenized money market fund.
This reduces transaction costs significantly.
This also validates the infrastructure for both institutions and the unbanked.
The same technology can send remittances much faster. Dogecoin price rose nearly 1% between September 5th and 6th as volume jumped 29% above weekly averages.
A midday sell-off to $0.213 was quickly absorbed by buyers.
Traders now view $0.22 as the key breakout threshold.
Dogecoin reached a local high of $0.2157, its strongest level in weeks.
Reports surfaced of a $200 million Dogecoin Treasury initiative, led by Elon Musk's legal counsel.
Rex Shares and Osprey funds reportedly filed the first United States Dogecoin ETF applications.
Futures activity surged 119% in August, reflecting heightened institutional positioning.
Dogecoin traded in a $0.008 range between $0.213 and $0.221. Tokenization converts real-world asset ownership into digital tokens on a blockchain.
This includes assets like stocks, bonds, real estate, and even art.
Bank of America analysts believe this could reshape asset management.
Enhanced liquidity is a key benefit, enabling 24/7 trading for previously illiquid assets.
Faster settlements eliminate multi-day delays common in traditional markets.
Tokenization allows fractional ownership, reducing investment minimums.
Transparency is improved through immutable blockchain records.
Lower fees are possible by removing intermediaries.
Itaú Asset Management, Brazil's largest private asset manager, has launched a dedicated cryptocurrency division.
This new unit will be headed by João Marco Braga da Cunha, formerly of Hashdex.
The division will manage over $216 billion across 15 trading desks.
It joins existing groups focused on equities, credit, and systematic strategies.
Itaú has been gradually entering the crypto market.
Since 2022, they have offered a Bitcoin exchange-traded fund and a retirement plan with Bitcoin exposure.
These products, along with their Bitcoin index fund, hold about $152 million in assets.
Itaú also offers direct trading of Bitcoin and Ether through its mobile application, with in-house custody.
Stripe Chief Executive Officer Patrick Collison stated stablecoins offer businesses faster, cheaper, and more reliable payments than traditional systems.
He made these remarks in a Hacker News thread on September 5, 2025.
This was one day after Stripe and Paradigm launched Tempo, a blockchain designed for stablecoin payments.
Collison wrote that Stripe had been disappointed with crypto payments utility for much of the past decade.
He said the company view shifted as more businesses began using stablecoins for routine financial activity.
Collison pointed to Bridge, the stablecoin infrastructure provider Stripe acquired in October 2024.
He said SpaceX uses it to manage money flows in hard-to-reach markets.
Latin American fintech Dollar app relies on it for banking services.
Congress is back from summer recess, and we are entering the final 4 months of 2025.
A major bill addressing stablecoins, the Genius Act, already passed this year.
However, a larger market structure bill remains a work in progress.
Congress has other pressing issues, including a funding bill deadline this month.
All eyes are on market structure legislation.
The House passed the Digital Assets Market Clarity Act with bipartisan support.
The Senate Banking Committee is working on defining ancillary assets and creating guidelines for the crypto sector.
Any legislation will need support from both the Banking and Agriculture Committees.
XRP is holding above $2.82 after a 4% decline.
Institutional selling capped the advance near $2.88 to 89 cents.
Buyers stepped in around $2.81 to 83 cents.
XRP remains in a 47-day consolidation below $3.
Traders are watching $2.77 as a support level.
October spot exchange traded fund decisions from the Securities and Exchange Commission are also key catalysts.
6 institutional asset managers have filed spot XRP exchange traded fund applications.
Decisions are expected next month.
Adam Back, an early Bitcoin developer, has entered the debate surrounding JPEG spam on the Bitcoin blockchain.
He argues that it weakens Bitcoin as money.
Back believes Bitcoin should be considered owned by humanity.
Developers act as stewards and need user consensus for network changes.
He pointed to the block size wars of 2015 to 2017 as an example of this principle.
Back criticized the increase in JPEG inscriptions stored directly on Bitcoin.
The number of JPEGs on the ledger has grown 20%, from 88 million in May to 105 million in September.
Fees from these inscriptions total roughly 7,000 Bitcoin or $777 million United States dollars.
Belarus President Alexander Lukashenko is urging regulators to finalize rules for cryptocurrencies and digital tokens.
He called for transparent rules and new oversight mechanisms.
Lukashenko said Belarus needs to keep up with global crypto adoption.
He also wants to safeguard investors and financial stability.
A state control committee report revealed violations in crypto platform transaction records.
Lukashenko added that in about half of the cases funds transferred abroad by Belarusian investors did not return.
He described this situation as unacceptable.
He instructed regulators in the high-tech park to draft clear rules for businesses.
World Liberty Financial, or WLFI, says it froze wallets to protect users from phishing.
The project claims the freezes were not meant to stifle normal trading activity.
WLFI stated 272 wallets were blacklisted.
215 of those wallets were linked to a phishing attack.
150 were compromised through support channels.
Tron founder Justin Sun had his WLFI address frozen.
This followed small dispersion test transfers between his own wallets.
On-chain data suggests these transfers did not cause WLFI token decline.
A new exploit targeting artificial intelligence coding assistants has raised alarms.
This exploit opens companies like Coinbase to potential attacks.
The exploit, called a copy-pasta license attack, injects hidden instructions into developer files.
It primarily affects Cursor, an artificial intelligence coding tool used by Coinbase engineers.
The attack takes advantage of how artificial intelligence coding assistants treat licensing files.
Malicious payloads are embedded in hidden comments within files like license.txt.
The artificial intelligence model then preserves and replicates these instructions across every file it touches.
This allows the virus to spread without direct user input.
Cardano retail investors have become bearish after weeks of price drops.
This creates an opportunity for large investors to buy.
Data from Santiment shows the ratio of bullish to bearish comments on Cardano dropped to 1.5 to 1 this week.
This is the lowest it has been in 5 months.
This negative sentiment coincided with a 5% price rebound.
This suggests that frustrated sellers may have created a temporary bottom.
Historically, Cardano price increases have started when retail sentiment is low.
When optimism is high, smaller investors often buy at the highest prices.
A new draft bill circulating in the United States Senate aims to establish regulatory workings for cryptocurrency markets.
This bill outlines protections for crypto developers and bankruptcy guidelines for some digital asset issuers.
It also addresses how federal regulators can support tokenization in financial markets.
While the House of Representatives passed the Digital Asset Market Clarity Act, the Senate is pursuing its own version.
The Senate version includes legal protections for those involved in developing and maintaining distributed ledger systems.
It also addresses bankruptcy procedures for digital assets, clarifying their treatment as customer property.
The bill proposes a joint study by the Securities and Exchange Commission and Commodity Futures Trading Commission on tokenizing assets.
It emphasizes that tokenized securities remain securities, while other tokenized assets do not become securities simply through tokenization.
That's a wrap on this episode of CryptoCast Daily. Thanks for tuning in. We'll catch you next time with more market updates, bold predictions, and fearless crypto insights.